Okay, so the month of November stats are in, and we have a really interesting market. So taking a look at the numbers, Ottawa market eased into a slower rhythm over the past few months. We saw activity cool more than usual for this time of the year, and that was mostly shaped by an early winter and a more cautious economic environment given all of the changes that are taking place. We have federal job cuts that will be coming, so people are a little bit cautious and weary of what they want to do in terms of their housing situation. But overall, we're sitting in a balanced market, generally speaking. Although we saw active listings decline, we saw months of inventory go from 3.6 to 4.2. Which tells us that demand is actually softening faster than we're seeing supply increase. We had a active October, which made up for some of the slower period that we had in September. But again, in November, we saw prices decline almost 3.56%, and it brought our total 6-month average to negative 6.17%. Though we're down about 6% over the past 6 months, we can clearly see that the data tells us that there is more of a shift towards increased inventory numbers, and we had a more pronounced November than we normally see, which was again reflected in the data. So let's go ahead and take a look at the segments to get a more in-depth view on what markets are more affected than others. So people usually ask us, what market are we in currently in Ottawa? And the answer to that question is always what segment you're actually looking for. Whether you're looking at a detached home, townhome, or condo, it's generally a completely different picture. So detached homes, we're sitting at just over 6% year-over-year increase with the months of inventory sitting at 4. This is kind of similar to what we're seeing boots on the ground. Although you have some options to choose from in certain pockets, homes are still moving relatively quickly, which again, more of a balanced environment, not too much of a lean on either side. Townhomes, average price is now sitting at 543,777. We're down just over 6% year-over-year. Months of inventory, 3.1 months of inventory. Now, this is up from October and September, and it seems like it's trending into the higher inventory segment. However, overall, it's still a balanced market. Now, I would say that that is more of a nuanced case just because you are seeing a tilt a little bit more towards higher inventory. So I can see in the next few months, inventory starting to build up. A lot of homeowners who weren't able to sell at the prices they wanted to are now shifting to rentals. So when the time comes, these will come back to market. Quickly looking at condos, we're up about 7% year over year. Months of inventory is sitting at just that 7.2 months of inventory, which signals that we're sitting in a strong buyer's market. Now, what I would say for condos is, again, when we look into that segment specifically, we'll see that it looks like buyers are starting to pick up the inventory that's been sitting for longer now, especially with changes going on. But we'll get into that just in a second. So looking into detached homes, active listings were down about 22% year over year. Average price, again, it's up about 6%. And the data matches what we're seeing pretty accurately. Inventory numbers are down. Prices have gone up as a result. You have less options to choose from, more competition, which is driving that number up. Now, again, it will be interesting to see what happens in the next month or two. With interest rate reductions happening, it should spark some interest going into the new year and going into a strong spring market. It should help with some buyer confidence. So we should see the detached market be active and competitive going into the spring. So townhomes, as I said, it's an interesting segment. Active listings are up about 17.97% year over year. Last month, just compared to October, they were up about 40% more inventory. Which really accurately reflects what's happening with the pricing. We're seeing a decline in price of about 6.71% year over year. Months of inventory is up from 2.4 to 3.1, and median days on market is up about 7 days from 20 to 27. What that tells us, again, there's more inventory coming to the market. Personally speaking, I work with lots of first-time home buyers. A lot of them are sitting on the sidelines. Homes that would otherwise have sold in the spring are now sitting. Again, it's due to two factors, one being cyclical, we're going into a slower winter market. The other being the fact that lots of first-time homebuyers are now opting to go new builds just because they can save on that GST, HST. The federal government clarifies the eligibility. So what I would say is there's definitely a tilt towards more inventory in this segment. If you are looking for a townhome, resale market has lots of options and well-priced options. I would keep an eye out on this segment going into the next 6 months because it'll be interesting to see what happens once the government releases the 5% and 8% credits for first-time homebuyers, because that will definitely affect this price point. And finally, condos. This is one of the softest segments out of the three. Active listings are down about 11.7% year over year. Prices are up about 7%. And months of inventory up significantly, sitting at 7.2 months of inventory. Days on market were pretty flat, 29 days on market versus 28. It doesn't paint the full picture. Market, there's lots of options. If you're a buyer looking for a condo, in one building, you'll have 2, 3, 4 options even. It's worth definitely negotiating on the price. If you are looking, builds, they have lots of options with condos as well, and they're offering pretty strong incentives to get their units sold. Again, very interesting to take a look at. Again, with interest rates, the environment kind of easing out a little bit, we should see some more buyers jump into the market. It'll be interesting to see how it shapes up in 2026. So there you have it. That's the Ottawa market for November. If you have any questions or there's a specific segment you're looking into, feel free to reach out or leave a comment down below. And we're happy to help if we can.